Good morning, good evening, good whatever time it is you're watching this. I'm Dave with Cups and Handles, and in this quick market recap, we're going to break down today's SPY price action, identify the key technical levels that matter, and discuss what I'm anticipating for the next trading session. We only have a few minutes, so let's jump right into the charts. Hey everybody, welcome to today's recap video and technical analysis for the next day. Now, let's go ahead and get started. There's a lot to go over, and I don't have a lot of time. Um, with that said, I'm going to pull up the 4-hour chart to begin with, and you guys get a look at this mess of a drawing. Okay, now we have a lot going on here, and to very quickly go over it, all these yellow lines are support ranges. We did used to have some red lines above us, but obviously we pretty much had a very large market squeeze. We went all the way from that 725, basically 726, all the way up to the 759. Well, I guess the high of the day was the 758.58. Okay, interesting number, but we broke a new all-time high today. With that, we have completely demolished this selling channel, so we're going to go ahead and delete that finally. And we are now at a very crucial spot, okay? Obviously, this says danger on the screen. Now, this is a major resistance range, and we're actually just going to change the style to suit that, okay? And every time we've gotten to this range or very close to it, we've had massive rejections. Okay, I don't think I need to spell this out too much, but as you can see, massive rejections just about each time we've gotten to this range. Okay, now I do want to say that in the spirit of that, generally we see resistances turn into supports. That's something I echo quite often on this channel and throughout my teachings, is that resistance ranges, if we're going to be having a market pushing upward, generally turn into support ranges. So while this is a dangerous area, this could also become basically the new floor. Okay? And what that means is, as long as we stay within this very tight buying channel, I do kind of expect it to expand if we're going to be continuing to head upward and not basically sell off again, then this will no longer be a danger area. This will be a support range, okay? And that will be a very quality base to build off of. Now, as you can see, besides the last month of selling, each time we've hit this range, we have seen two different things. One, we've seen a weakening buying or weakness of buyers. So we've gone a lower high, a little bit of a higher high there, a little bit of a higher high, breakdown, couldn't meet that range at all. And then all of a sudden, we kind of have that squeeze, right? And that's really reflective of this range. Basically right in here. This is almost the exact same move. Right there, and almost right there. This one is not as pronounced, but these two ranges are almost identical. Okay, almost identical in terms of the actual structure too. You see how it pushes up, has that little bit of dip down, almost in the exact same area, and starts heading up. So potentially this is a really dangerous range. Okay, I think I've made that point very clear. Now, with that said, okay, we did break through some major supports today, or some major resistance ranges. So the resistance above us really doesn't exist at this point. Now, we can still target resistances, and I heavily suggest everyone draws this buying channel on their own charts. But basically, let me change the template, is that the top of this channel is our new resistance. Okay, as we start pushing upward into new territory, that becomes your range you need to start being careful of. Okay, because we don't have resistance ranges to go off of at this point. Okay, but we're not completely lost in the water. We do have the bottom of the channel, top of the channel. We see multiple bounces between those two ranges, which means that as long as this doesn't break, that's going to be very strong. That creates both the upward resistance and the downward support. So those are very key ranges to be paying attention to. Now we're going to go to the daily time frame here for a moment. Random cup drawn off to the side. We're going to hide the drawings and we're going to turn on the Bollingers and the moving averages. Now we are going to zoom into this very, very closely, which is going to be a little bit of a mess to look at. I do apologize. But we're seeing the moving averages consolidating. Okay, we're starting to pull up again, and as of tomorrow's open, the 5-day moving average will be pulling up quite a bit, probably to that 748, maybe 747. But that will basically be pushing the 5-day moving average above the rest of those other support ranges, those other moving averages, which is kind of the first step to really solidifying bullishness. Okay. So if we are going to turn very bullish here, if we are going to see the 10-day moving average pull above, then that's the first step we want to see. Okay. Second thing here, and this is where it kind of becomes a concern again, is that the upper Bollinger is basically right on top of us. Okay, the upper Bollinger is currently at that 759.81. Now, I do want to kind of zoom out for almost a year, and we're going to turn off the moving averages because we don't really need that right now. But we have not had an upper Bollinger move since, I believe it was October. Yeah, it was October 28th of 2025. Okay. That is very uncommon. But it also means that the market has not been wanting to push outside of the, the standard range. There's been no willingness to have that deviation above the standard. Okay. Now, with this great news, and really the news isn't that great yet, this is all just kind of speculative at this point because the conflict between the United States and Iran really isn't over yet. It can reignite at any moment. Um, but what I think is going on is that the market is largely tying basically the conflict in Iran to the interest rates and what the monetary policy is going to be. Trading is a skill that can last for a lifetime. Join my Patreon for live classes, my personal market analysis, premium Discord access, and direct communication with me. Invest in yourself, become a more consistent trader, and build a better future for yourself and your family. Visit patreon.com/wooksy to join today. Thank you so much, and let's return back to the video. And because of that, because the market's trying to tie the monetary policy to the interest rates, that means that if there's a pause in the conflict, if the conflict is over, then the odds of the rate hike heavily go downward. Okay. But when the conflict starts back up, you see that each time it does, we start selling again because those rate hikes start getting priced in again. So that's mainly the concern right now. Now, the second concern is, again, the yen. It has been being bought up quite a bit. Now, the US Treasury did put roughly $5 to $10 billion, which is kind of a drop in the bucket for the US Treasury, right? Into the yen. Okay. This might only be the start of that. Now, something that I feel like a lot of people aren't really focusing on, which they should be, is that this intervention is so far one of the largest, okay, in terms of how short has been, the duration of it so far and how deeply they've been trying to buy up the strength of the yen. With that said, I don't think that's over, okay? That means that they have been going through the route of, buying and selling treasuries. The US Treasury did basically, push that money into the yen so that the Bank of Japan doesn't have to continue liquidating treasuries. But I don't think this is enough. Okay. And I know it's not enough. This is definitely not enough because this has not strengthened the yen very much at all. Okay, this is only given the yen roughly about 6 yen less per dollar, which that that isn't very much strength at all. We've seen some of these interventions take the yen all the way from the or the yen to or the USD to yen pairing all the way from this 162 down to this 140 range. Okay, we're not anywhere close to that. So I don't think we're even getting started basically at this point, which means that we're still having those bearish conditions being present, even though we're seeing all-time highs within the SPY. Okay, we have two major factors going on, which is, are we going to basically see the war cease? And are we going to see the Bank of Japan go hog wild on trying to buy up the yen to strengthen their currency so that they don't continue pushing downward? Now, there's a couple other factors with that as well. I do think the Bank of Japan very likely has to heavily modify their monetary policy in the next meeting. I think that if they don't start heavily hiking rates, this is going to continue getting out of control in terms of how weak the yen is. Now, with that said, okay, there's something that we aren't having this month, which is I explained this in my video yesterday, but it's the FOMC. We don't have any FOMC meeting this month because the the Fed chair, uh, you know, Warsh is going to be at the Jackson Hole Symposium. And because of that, that gives us roughly a whole 2 months to price in whether we're going to be seeing a monetary pause or a monetary hike. Now, the CMA currently is showing the odds of the hike being extremely, extremely high. And that's very concerning. And even though there's a lot of euphoria in the current market, I think that once that euphoria dies down a little bit, we're going to go right back into a selling posture. I could be wrong about that, and I'm willing to be wrong about that, but that's what I'm truly seeing and expecting. Now, going over the expectations for tomorrow is that we have the JOLTS job openings at 10 a.m. Those are usually pretty impactful for the market, but I don't think it's going to really cause the market to dump. We've been seeing that data coming in cooler and cooler and cooler, which actually provides strength to equities. I know that sounds a little backwards, but when the economy is doing bad, usually equities do fairly good. Okay. Not always the case, but that tends to be the case during the majority of the time. So that's something we have to be concerned with a little bit. Secondly, here, and let's go ahead and turn this Bollinger Bands off, is that the structure here is not super great. Now, we can be seeing a cup trying to form here. Okay. I don't think that's going to be the case, but that can be happening. Or what we can be seeing is essentially a massive cup from this 756. Okay. Which means is that we should be expecting a push downward again. Um, Especially with this upper Bollinger being where it is. If we are going to be heading upward, basically any at this point, then we should be pushing into that upper Bollinger, okay, which will be a mean reversion territory. When we do have those pushes into the upper Bollinger, we usually sell off very, very hard. So this might all be just for liquidity. Not entirely sure yet. We have to see how that plays out. But we also need to focus on, again, this resistance range. So you have the upper Bollinger, this resistance range, the yen carry trade, all kind of bearish sentiment against us. You also have the odds of the rate hike being bearish sentiment against us. Does that mean we can't continue pushing for a little bit? Absolutely, especially now that we saw that previous selling channel break. This definitely gives a lot of credence that we can absolutely continue pushing up into this buying channel. but we don't have any resistances to build off of. At this point, we don't really have any major support to build off of other than this channel. Okay, and again, I do expect this channel to expand to the downside or expand to the upside, very likely expand to the downside a little first. Now, with that being a cup, okay, what do we expect at the top of a cup? We expect bearish structure. And why do we expect bearish structure? Well, we expect bearish structure because we expect a handle to the downside before continuing to push upward. So are we going to start seeing this move to the downside? I think the likelihood is pretty high. So my expectations for today, tomorrow, whenever you're listening to this, is while I don't expect us to push down all the way to the 748.80, is that I do expect us to push down towards the bottom of this channel a little bit. I do expect us to reject this resistance range a little bit. Even if it's a very small handle, I do expect it to start building before we continue heading upward, which, seeing how the channel and the days are, that means that we can be pushing upward after that pull down, potentially within the next 1 to 2 sessions. Okay, and we could be pushing all-time highs again. But we need to see a little bit of expansion within the daily Bollinger. And we do need to see our supports starting to pull up. Now, one thing that is going to be very close together is the 5-day moving average, because again, that should be probably around that 747, 748 range, maybe even 749, okay? But that coincides very heavily, and I want to turn this off. I want to delete this cup for a moment, but that coincides very heavily with this support right here. Okay, and that's at this 748.80. Now, what's starting to build there? Potentially a head and shoulders. This would be kind of exactly what I'm looking for within the top of this cup, within the top of this resistance range, within the middle of this channel. And that would mean that this buying channel would expand downward a little bit, if this buying channel will hold. So that's kind of what we're going through right now. I know the waters are a little uncertain at this point, but don't let things, shake you. Just use these use the buying channel, use the support within the bottom of this buying range, the resistance within the top of the buying range to continue traveling through this channel until we break it. So that's the video. Hopefully it helps. Thank you all for watching, and if you do enjoy my content, I would love if you could subscribe, if you can like the video, leave a comment. That all helps me build the channel. I've been struggling to get the YouTube algorithm to like me very much, so that would help greatly. But I appreciate you all. Thank you all for watching, and I hope you all have a very, very good trading day. That wraps up this market recap. If you found the analysis helpful, please take a moment to like the video, leave a comment, subscribe to the channel, and share it with someone who would benefit from these daily market breakdowns. It really does help support the channel and allows me to continue creating free educational content for everybody. As always, have a trading plan before you enter a position, manage your risk, and remember, we're not trying to predict the market, we're trying to prepare for it. Thank you all for watching, and I'll see you in the next one.